Hey everyone, welcome back to another Monday Market Update. I'm Caitlin McKegg. I am a real estate broker here in Phoenix, Arizona. Every Monday I'm here with an update on what's going on in the Phoenix real estate market. I hope all of you had a wonderful Easter weekend, hopefully spent a little bit of time with family or friends, maybe took it easy for the weekend. It was windy, but it was very nice here in Arizona. So without further ado, let's jump right in. I do want to say, make sure that you subscribe if this is your first time to my channel. Every Monday I'm here giving these updates, and I also post a new video on Friday that has to do with Phoenix real estate, so you don't want to miss that. I also want to say thank you to the Cromford report. I am a subscriber and they provide such great information for realtors to use for their clients, which is largely the information that I'm here sharing with you today. So let's take a look at my fancy whiteboard and talk about what we have going on in the market right now. So first I want to talk about luxury, because we've had some changes in the luxury market in terms of activity and prices. And so we've seen a lot more activity in the luxury market, I would say, in the last year and a half to 2 years. Definitely one of those, I think, side effects of COVID happening. We ended up getting a lot more interest, whether it's people moving from other states, getting second homes, and just a lot of luxury buyers in our market since we started the pandemic. And so as we look at these various luxury areas in our market, Paradise Valley, Arcadia, Biltmore, and North Scottsdale, we've seen some pretty big increases in the average dollar per square foot. So the average dollar per square foot in Paradise Valley used to be $472, and now it's $631 per square foot on average in Paradise Valley. That's an increase of 34%. So we've had some pretty big gains. Arcadia is seeing the same thing. Used to be $459, it's now $600. That's an increase of 31% there. Biltmore was $361 on average, and now it's $461. 28% increase there. And then in the North Scottsdale area, it used to be $348, now $452, which is a 30% increase. So in all of these areas of the valley where we see a lot of luxury homes, we've seen an increase in activity, keeping low supply, which has increased prices. And so we've seen this big change in our average dollar per square foot in all of these markets. I will also say these changes are over the last 12 months. So there has been some good amount of time in this, but that's still a pretty big jump by 30 to 34% in all of these markets, especially considering it's our luxury and higher end, higher priced areas. So that's what's going on in luxury. If you're a buyer, keep in mind anything over 2 million, the majority of buyers are using cash in that price range, and everything in that price range is still going quickly with multiple offers. It's not until we get above 3 million where we start to see things cooling off. So that's just a quick update on what's going on in luxury. Now, I also want to talk about supply. While our overall supply hasn't been increasing significantly, we've seen a few cities where the supply is finally coming up above a certain point for the first time this year. So I have these listed here. We've got Scottsdale, Buckeye, and Chandler. All three, we've started to see some increase in supply in these cities, and Scottsdale is above 400 homes active on the market for the first time this year. So I know that sounds slim, but oh my gosh, this whole year we haven't had more than 400 active listings in Scottsdale, and now we've finally crossed that number. Same thing with Buckeye. We're now at 180 listings active for sale, which is the first time we're hitting that number this year. And in Chandler, seeing the same thing, we finally hit 160. Again, it's just unbelievable to think that we had less than 160 active homes on the market this whole year in Chandler, but that's, again, one of the reasons we've seen these price jumps, because there's just not a lot to choose from for these buyers. Now let's go ahead and talk about the Cromford Market Index. If you are new here, this is a proprietary algorithm that the Cromford report has created. It helps us understand supply and demand factors in our market and helps us predict future price appreciation. Basically, as long as this index is over 110, we're in a seller's market and prices will continue to increase. Anything under 90 means that we're in a buyer's market. And so I have a little treat, I'm just gonna show you the real CMI here. We actually have these dials. I didn't write it out this week, so we're gonna look at it this way this time. So this week, the CMI is at 424.5. So remember, anything over 110 is the seller's market. So we're still in a very strong seller's market overall, you guys. But what has been changing quite a bit is our demand. Now our demand, it's at 104.9. Truly, anything between 90 to 110, according to the Cromford report, is a normal range. So even though 104 is above 100, which is kind of where they consider normal, it's still in that normal range. And so our demand has actually fallen to normal, anywhere between 90 to 110. So that has been in the 125 range before. It is now more normal at 104, and interest rates definitely have something to do with that, in my opinion. Now we look at our supply, we're at 24.7, so that means we're about 75% below normal for our supply, and that has not changed that much. I know I just gave some good news for Scottsdale, Buckeye, and Chandler with some new listings, higher numbers of listings on the market there, but it's not making a difference in the CMI. It's not making a difference in our overall supply. So supply is still very low, 75% below normal. We still need more homes on the market to really stop these price increases. But since demand has been falling so much, we have started to see the CMI go down. It was only a month and a half ago or so where it was in the 450 range, and that has continued to go down and down as demand has continued to go down this whole time. Now, we've also seen an acceleration in the CMI coming down. Okay, so in the last month, it has actually gone down 9.5%. But as of last week, if we looked back 30 days from last week, it decreased 6.4%. So an acceleration in the decrease of the CMI reading. So that's telling us that we're starting to fall at a little bit of a faster rate. Now, I don't know if that's going to continue, but as long as demand continues to go down, that probably will. And if we do start to see supply creep up, then the CMI is definitely going to start to go down. Now, I know in the fall this started to happen, and then start of the year it spiked back up. But the difference then is we didn't have these interest rate hikes. So we'll see if that continues to affect it overall. But that's where we stand this week. I hope this update was helpful for you. If you're thinking about selling your home and you want to know the average dollar per square foot in your market or your city, please reach out to me. Check the description below. I have a link where you can request that information. And if you just want an instant home valuation to find out how much you could sell your home for, I have a link for that as well. If you're looking to buy, I've got a link to check out my MLS, so feel free to do that. And if you have any questions at all, feel free to reach out to me by call, text, or email, or click the link to set up a time to chat. Thanks so much to all of you for subscribing and watching and coming here every Monday. I truly appreciate it. I hope everyone has a great week, and I will see you next week.